Good morning, friends and traders. This is Doug Campbell with Right Way Options with your morning market preparation video for November 30th, 2017. So this morning we're getting inspired today by the news that the Senate moved forward the tax reform bill to the floor for debate. And that's got the futures all kinds of excited. Now, let's keep in mind, anytime the market is really under the influence of that Washington spin machine, we have to be a little bit careful. News out of that spin machine can flip this market back and forth very, very fast. So keep that in mind as we move forward. Now, the talk is that there's going to be a vote sometime probably within the next 24 to 48 hours on the tax reform bill. We can expect probably, if that does pass, the market will like it. If it were to fail, and just so you know, the last numbers I saw, there's a margin of 1 or 2 votes, whether this will pass or not. And if it does pass, or does not pass, you can expect the market is not going to like that much. Well, just use your imagination what could possibly happen. Now, also keep in mind that that's not going to be the end of this little dog and pony show out of Washington, D.C. Immediately after that, we face a federal government shutdown in early December. So we're going to be right back into another spin cycle of that Washington debate going back and forth, and probably the last minute Hail Mary save. So the market could certainly be affected by that as well. Kind of keep that in mind as we move forward here. Could be a real dangerous time. In fact, I would say that the market is never more dangerous than when it is subject to the political turmoil going on. We get really quick moves, very fast reversals on news reports that could be incorrect reports, but we flip back and forth. It would take one Republican senator that says, I'm not voting for it, to turn this market straight around in half a heartbeat. So be careful when you go forward. My suggestion is, if you are going to trade, and that you should make sure that you remain very flexible and be willing to take profits quicker. Just be very flexible, because we could see some violent price action around this event, okay? Just a 2 cents worth from experience trying to trade these events before. It's just like, it's guessing. It's like going up to a roulette wheel and throwing money down on red or black. You got a 50-50 shot that you're going to be right, and it can flip back and forth multiple times intraday based on the news spin that comes out of DC. So be careful. Diamonds looking very, very strong here. Popped up, gapped up, stayed up, rallied toward the end of the day, bringing it back to look pretty decent here on the day. We're looking at a gap up morning this morning, substantial gap up based on this news. Probably close somewhere around 80 points in a gap up here. So leaving gaps behind in a very sharp rally is another reason to just have a little bit of caution about chasing. You don't want to chase trades into this market. Let's take a quick look at the SPY. SPY moving up here. We had a little bit of a concerning candle here. Just one of those candles that make you have a little bit of uncertainty. What comes next? Well, this morning now we're going to get a gap up. SPY looking to gap up, maybe not all the way up to the high of yesterday, but a significant move to be sure in that look. I'm going to jump to IWM first. IWM left behind a kind of a shooting star pattern here, and you can see it is gapping up, but right now maybe midpoint of yesterday. So that's looking good as well. Nice strong bounce off of this price support here. Just a little bit of question as to which way IWM might go here because of that shooting star. So just be a little bit careful on that one. Let's take a look at the Qs now. Now the Qs really got thumped on hard yesterday. All over the place in the tech sector. Trends were broken. Reversal patterns were set. Now, I want everyone to be very clear. It's not this first move down that's the real concerning move. The one you want to be worried about is when and if we do bounce up here in the Qs. I expect we will. Now, of course, we could just go sideways and fail from there. But a bounce up that fails to make a new high or happens to make a double top high with a failure pattern, that's where the real sellers will come in. And I don't know if that will occur, when that will occur, or what that's going to look like. Just remember, it's usually never that first bump down where the real panic sets in. It's that rally back and that failure pattern there where you have to be concerned. So for now, the NASDAQ is popping up this morning, but only slightly. We're looking at, a decent pop up for the NASDAQ, 18 points. But you've got to see that it's really popping up. If I extend this out, make sure that's nice and straight. It's popping up and still below price resistance. So be careful here. I don't know exactly what created such a massive sell-off in the NASDAQ, and that really doesn't matter. It's just all of a sudden tech's lost favor. So be careful here in this sector. That was a massive volume spike. It could be a signal. But again, don't panic because it'll be the rally back failure where the real problem will occur. Let's look at the VIX here just really quick. The VIX did rally yesterday. So we had a really sharp move up in the market, but the VIX rallied. And that's also just a little bit of a signal of concern that we're going to see, at a bare minimum, more volatility. And I think that's what this is signaling, is that it understands that Washington is moving forward with all these things, and we could see some volatile price action occur in there. So be careful, watch that closely, and just know that we're probably going to experience a little more volatility than we've seen here as that spin doctoring goes on. Let's take a real quick look here at the earnings calendar. Excuse me, the economic calendar. On the calendar date, we have jobless claims at 8:30 and personal incomes and outlays. Both of these are expected to be pretty good. As a matter of fact, jobless claims is really, tracking at historic low levels. If it weren't for the hurricane in Puerto Rico and the impacts from that, we would be probably at historic lows in jobless claims. Personal incomes and outlays are looking to increase just a little bit there. And we've got a couple Fed speakers today. We have the Chicago PMI, which is actually really, really strong. They're calling for a little bit of a pullback, but it's still showing possible overheating in that area. So, Nothing that I think is going to bring the market down or anything like that, but just that the market, this might be one of the first reports out there showing that we could be overheating just a little bit. So keep an eye on that one. I wouldn't be scared of it though. On the earnings calendar, we have just about 40 companies reporting earnings today. after the market close, we have like AMBA and AABA. Looks like it's moved its report today. VNW reports after the close. Sears Holding reports after the market close today. Kroger Stores reports after the close today. So some significant reports and reports you want to keep an eye on as we move forward here. So folks, I hope you find this information helpful. And if you do, please do me a favor. Click that subscribe button on the YouTube channel and the follow me button on Facebook, and please click those thumbs up buttons. Leave me a comment. I really do appreciate it. I want to wish you all a great day and great profits, and I will talk to you all very, very soon. Take care now.